required for success. Being right a lot. Oh yeah, patience and discipline. So Ken got his biggest to date, 251 pips, right on Ken. YJ said he got his first 500 pip trade, right on YJ. Marcia said she's doing fantastic. Muy bien. Wayne is the best in the business, right on. I appreciate that. I really do appreciate that. I don't know if I'm the best, but I probably try the hardest. Anyways, let's get going. Thank you for the good feedback. Today is the 13th of April. It's a Monday in the year 2015. This is your daily Forex trading strategy session. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. Today, we are going to cover the Commitment of Traders report and the calendar and create a strategy plan for the week. How does that sound? Is that what smart money does? Plan it all out? Yeah. So I'm looking forward to that. If we have time, I'll do some technical analysis, but of course we'll do that tomorrow during the London lunch, and Wednesday during the London lunch, and Thursday during the London lunch, and Friday we'll do all the technicals. So at least today we'll focus on the fundamentals and an event risk. So no time like right now, so let's get going. Remember, trading and investing is risky. It's even more so with leveraged. Not appropriate for everyone. Your past performance, good or bad, never predicts future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. If you're watching this recording on a site like YouTube, you're going to sit here and watch 1 hour of our work, pay it back by spending at least a half a second, like giving it a like. And if you could spare the extra 10 or 20 seconds in your massively, busy day, leave a comment. All right, so let's go. Let's start with the COT. The Commitment of Traders report shows us large positions of various participants. One thing that you need to do if you're a hedger, and that means you're actually buying a physical commodity in the market and hedging its price. So for example, if you produce cereal, breakfast cereal, you purchase things like wheat to make your cereal and sell your cereal. One of your biggest concerns is the price of wheat going up and down, up and down, up and down, up and down. Meanwhile, your box of cereal is always going to be $3.20 at the grocery store. It can't fluctuate day by day, week by week. So you need to hedge those prices to keep them stable. So if you're a hedger, so let's say your fear is the price of wheat's going to go up, right? That so if with futures, so if futures market goes up, you make money, offsetting your losses in other places. That's a hedge. If you're a hedger, you need to report that to the government. And you say, hey, government, this is what we do. And so you're denoted a hedger. So you can take the hedgers out of the market and find these guys. And these guys are reporting their positions as non-hedging, otherwise known as speculators. They're actually trying to make money in the price of movement, in the movement of price. And they're large, and they're required to be reported because they're so large. I forget the number, but they're big positions, right? And if you take them out of the market, out of the numbers, those positions come out because they're reportable. Then you have the non-reported market participants. They're the ones that are in the market. They're buying and selling futures contracts. The only thing is they're not large enough to report, but we can see their volume. So now you know they're small speculators. You see how it works? How they keep just pulling various markets out, and then whatever is left over are the small. Another way of calling the small speculators is they're called dumb money. And what we're looking at here is smart money. All right. But you say, but my mama didn't ain't raised no fool, right? So anyways, sorry about it, but we're all dumb money. This is the smart money. They're large, non-hedging, speculative partners. This is the euro. Now, because they're euro futures contracts, they're priced in dollars, right? So this is the euro USD. Now, what do you see in this chart? Analyze it for a second. Is it just gobbledygook? Well, look for right off the bat is the market net short or net long? Well, what you do to discern that is you look at the zero line right in the middle. And if this black line is below the zero line, then the market is net short. And what that means is there's more short positions than there are long positions. That's all. But that's important, isn't it? And the second thing you want to look at is the black line itself. If you look at the far right, you want to see the change in the positions. So according to this data, which was released it's basically Wednesday morning data. Tuesday's close, reported on Friday, so it's as recent as we can get it. It's extremely bearish. I mean, there's the zero line. Extremely bearish, but over the course of 3 weeks, slightly less bearish than it was before. Still bearish, just less bearish. And then the third thing I like at is why the net change. What happened to create the net change? So I'm looking at here. Okay, the first one I like to look at is here. Oops, that's supposed to be a circle. Are there more people that are short or less people that are short? Less people. Okay. Now, these positions here are the bulls. Are there more bulls? Are there more market participants that are long euro or less? Yeah, really no change. So going back to here now, does this look based on market participant, the actual money in the market, right? Is this small uptick, is it a reversal or a hiccup? A reversal or a retracement? Yes, it looks like profit taking. It just looks like right now less people short, but nobody's going long. Now, if we had seen a big pick in the gray line, if people were getting out of their short positions and into long positions, that would be the potential for a reversal. Right now, it just seems like some profit take, nobody went long, and the idea is if it's a strong trend, they'll probably short again somewhere in the near future. What? That's how you interpret that. So you want to get short again somewhere at resistance. Just very quickly. If you had done this homework over the weekend, like one should, you would say, boy, I want to sell Euro USD today, or tomorrow, or the next day, something like that. And this is the Euro USD. Let me zoom in now. Over the course of the last few hours since the open, Asia was flat, Europe took us straight down. say, yeah, Wayne, but it's only 100 pips. And I'm like, yeah, you're right. But based on COT data, that's not surprising. Okay, cool, right? That's how you put it all together. Huh? Hoorah! I think I'm getting Army and Marines mixed together, right? Jenny from the block says, yeah, maybe Euro's flattened out. Well, we'll look at that later, but we are getting pretty close to a double bottom. Okay. Jenny wants to know if I expect a small bounce here. Well, I don't know. I'm doing fundamentals right now. Could be a rabbit, could be. All right, piggy, piggy, piggy. Bullish or bearish? Well, net bear, right? We're net short because the water line's here. Okay. So we're net short, but each and every week, slightly less net short than before. Any change in the bears week over week? No. How about let's look at the trend? Has there been a change in trend over the last, month or so? I would say yes. We were here, then we were here, then we were here, and now we're still here. But it doesn't look like an uptrend. Okay? It's not dramatic, but it's something. Now, what about the bulls? A slight uptick. Okay, I wouldn't call that a new uptrend, but something. So maybe baby in here. I don't know. It's interesting. And so therefore, when you add those two lines together, that's what the math produces. How would you describe this over the course of the last 6 weeks? Yeah, stabilizing maybe, right? And almost a head and shoulders if you want to get all goofy with it, right? These are positions, not price. But, it started doing this over the next few months, right? Who knows? Is that right, Wyatt? Can you provide a URL? What's the link, Wyatt? Mucho gracias, by the way. What is that? Somebody's somebody's programming their EAs. Funny. Yeah. All right. So interesting, right? Interesting. You better get your buffers right, Wyatt. It's one thing I can't stand is mixed up buffers. All right, Yenny from the block. Okay. Wow, huh? So you can see a clear uptrend. Okay. A fair amount of money going into short positions, but a fair amount going into long positions. Now, we expected that to happen somewhere in the third week of November to January 1st, a potential change from bearishness to bullishness. Why those particular weeks? Yeah, but why? But why those? Why would Why would I say the third week of November to January 1st? Where does one get that nonsense? Yeah, but why wouldn't I just say January 1st? Because sometimes it happens at different times of the year. Does anyone live in America? Do we got any Americans in here? November in America. Thanksgiving. Yes. So very often that's the catalyst where a lot of traders, let's say they decide they don't want to trade at the end of the year for whatever reason, they're just not confident in the trading. They stop the vast majority of their trading as they go into Thanksgiving holiday break, and then December is just sort of like fill the gaps, rebalance portfolios. But they're not doing heavy, speculative trading. They're just it's like it's like the big boys. They go to the Caribbean with their mistresses on their private jets, and they just have the interns do the trading. The first and second week of December. Something like that, right? They send in the kids to just kind of clean up the books a little bit, and that's that. The heavy lifting's done. Sometimes that's the case. The last couple of years, it hasn't been the case, but past performance does not predict future results. So the last couple of years, it wasn't the case, but in other years, it was the case. So, market conditions change. By other years, I don't mean like 2008 and 2009 when the world was crashing. I'm talking about 2004, 2005, 2006. I've seen it all, right? So very often when I'm discussing these fundamentals, that's why I'll say could be Thanksgiving, could be Christmas. Okay? And in this case, you can see, even though we didn't really sense it price-wise, you could see Thanksgiving is right there. And look what happened ever since. Coincidence? Yeah, maybe, right? But nonetheless, that's actually what happened. So here we are, and it's the first week that repatriation should be over. And what happened? Huh, whale oil, MR fish. Interesting, I think, right? Look at the weeks going into repatriation. That's the last month. That's the month March. I don't know, one could data. One could believe that, right? Even if it's nonsense, even if it's a random walk. The month March is the last month the Japanese companies need to move money back to Japan. And those are the 4 weeks of that particular month. Coincidence? Yeah, maybe, right? But maybe not. So anyways, I think it would be interesting if the yen weakened from here. I don't think it'll be dramatic. Don't get all goofy about it. But I'd like this to drift basically downward, but I think it'll be downward to sideways for, oh, I don't know. Let's see. What is it? The middle of April to the middle of May. Middle of May, the middle of June, middle of June, middle of July. For 12 weeks, maybe 16 weeks. Generally down, but generally sideways. What do you think? Well, you better agree with me or I'll get mad. All right, so anyways, yeah, so more people short, more people long, up, down, turn around, right? Be careful. This is why you decide you're either the gray line or you're the orange line. Decide what team you're on. You know, what did I say early last week when we were at like 118.50? Yes, Zeal. That's my plan, Zeal. 16 weeks from now, I'm going to be heavily net short Japanese yen. Yeah, we were at 1850 last week, and I said, don't be shocked if this week we're at 125. Well, we're at 121. Yeah, you're welcome. All right, so let's move on to COM. Let's go to Aussie. Okay, and what is, according to Governor Stevens, what is the Aussie dollar worth? According to the Reserve Bank of Australia, what is the Aussie dollar worth? 75. What is it worth right now? 75.50. We're a half a penny off. But what does the RBA think? Well, let me change it. Does the RBA think the Aussie dollar could be worth less in the future? Or have they speculated that it could possibly be worth more in the future? Yeah. So last week we did a bunch of binary options. I sold the Aussie dollar at 77. Now it was binary, so I didn't pick up 150 pips, but that's the downside to a binary. There's some upsides and there's some downsides. But I was just showing you how to place the trades, right? And why would I do such a thing? Largely due to the Commitment of Traders report and central banking policy and blah, 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 blah. It's called fundamental analysis. So I keep preaching, make a decision on what team you are, have a strategy. You're right. You need to be a bull or a bear. So it's pretty easy for me when you get a 200 or 300 pip retracement into a psychological level like 77, look for a technical reason to sell, like a reversal pattern. Shouldn't be complicated, right? Only you make it complicated. When you don't have a strategy, you make it complicated because you're trying to figure it out on the fly using random variables, right? You're not going to get consistent results, well, not in a good way anyways, right? You can consistently lose money in multiple different ways. If you actually put a plan together and have a strategy ahead of the time, then you'll probably make money in generally the same way. versus losing money consistently in all kinds of ways. It's not even the consistency that you're looking for, right? So you want to be consistently profitable doing the same type of thing over and over again and getting the same results. Because we all know if you're doing the same thing over and over and over again, getting different results, you're insane. But in Forex, if you're doing the same thing over and over and over again and getting good results, you're rich. Now, you might be crazy, but at least you're crazy rich. Yeah. Well, Daniel says, I put you guys short at 79 a couple of weeks ago, and he got us 350 out of that. Right on. Is anyone else? That's like the third person today that has reported that they're getting pretty big swing trades. And that is something we have really focused on over the last month and a half. Has anyone else been getting a home run or two? So Daniel says 350. YJ said 500. Marcia said she's doing really well. Someone said they got 70 pips, and that was a really good trade for them. That's cool. I like to see that. Yeah. Igor made 400 pips on Euro odd. Right on. Greg is still short for 500 pips. Right on. Good for you, Gregors. Remember, I said that one of my goals this year was to get you into your 1,000 pip trade. So good. Yeah, YJ says I went over swing trades several weeks ago. Yeah, cool. I love swing trading. Yeah, Greg says it's fine. You're finding it hard to stay in. Well, you don't have to. Remember, there's no glory in Forex. Nobody cares if you made 1,000 pips or not out of the trade, right? So, and if you're trading other people's money, they don't know if it was you got 500 pips and it should have been worth 1,000. All they see is the pips profit. I mean, right? There's no judgment there. But if you're confident in the trade, then stay with the trade. If market conditions have changed, change your expectations or change the trade, right? Just be logical about it. But I told you, we've covered this a couple of times recently. When you're a professional trader, your worries are different. As an amateur trader, you're up at night, you can't sleep, and it's because you're losing money, and you're just losing and losing and losing, and your fear is losing more money. As a professional trader, I mean, it's your job to make money, and you do it. That's why people give you money to trade. But now you're up at night, and you're sweating bullets, and you can't sleep, and it's because of all the money you're making, and you're in trades like that where you're up 500 pips, and there's a bird on one shoulder that says, you got to get out, you got to get out, you got to get out, you got to get out. But there's nothing wrong with the trade. But still, you can't sleep at night. You're like, oh it's going to retrace 200 pips. It's going to retrace 200 pips. Right? And then you wake up and it's moved another 100 pips for you. And now you're up 600 and you're like, oh, thank God. God had nothing to do with it. Right? It was market participants drove it down. So, it's really tough. Right? It's tough. Once you're a pro, you can't sleep at night because of the money you're making. And you're so worried that you're going to give it back. So, good. Howie's in a U.S. Swiss franc 400 pip trade and still going. Cool. So some of you guys are in a big trade. Are you sweating bullets? Every 50 pip retracement is a minor is a minor earthquake. Yeah, well, good. Right on. And how many people are ready to trade other people's money? If I gave you, let's say, 100,000 euros to trade, would you be sweating bullets then? Yeah, could be a rabbit. Hey, dude, you might be sitting on $25,000 profit, and you're just cool as a cucumber. All right, cool. Hey, a lot of people, it affects them. I'm glad you're different and you're special and you're unique. Your mommy was right. I don't believe you though. All right, all right. Right. Well, something's going on here on the Kiwi. It keeps going up. We talked about this a few weeks ago. Price back above the waterline after trending basically since the beginning of the year, and it's picking up its pace. Look at that. Okay. One, two, three, four, oops, 5 weeks in a row, there's been a dramatic decrease in bears. And at the same time, a pretty reasonable and sharp increase in bulls. And price is just beginning to stabilize. Yeah. This could be very, very good for a very long time. Yeah, Mike says long time before I'd become a pro. Everybody starts at the beginning. Just because you've been trading a long time doesn't mean you're ready, right? One of my best favorite metaphors are like people that golf all the time, year after weekend, for 12, 20, 40 years, and they're never any better than they were 40 years earlier, or 20 years earlier, or 10 years earlier. But they golf every weekend. Well, because they're not doing anything to improve. So they're just consistently the same. So in this case, since you and I, Mike, you've got a few years under your belt, but no real success to report. As far as I'm concerned, you just started. It's not how many years you've been trading. It's how many years you've been trading properly, building actual skills and applying scientific methodology to the process of improving, identifying strengths and weaknesses, developing plans, patience and discipline, all these things. So as far as I'm concerned, you've been trading for 5 weeks. So it all starts, right? The cool thing is you're probably only 12 to 18 months away from having real skills. That's very hopeful. So Daniel says on this one could be an interesting Kiwi yen trade. Oh yeah. Yep. 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 I agree with you. So Kiwi's interesting. The first of the commodities to take off. And finally, kitty cad. Meow. No change. And this is interesting, right? Because if you look at the USD CAD chart, it's just sideways, right? And guess what? Nothing's changed. But you know what? Let me comment on this because I've made some comments, maybe not as explicitly as I could. So let me state it. I think the USD CAD, will be generally sideways for a very long time. Um, Canada has now had an opportunity to adjust things for their lower valued currency, but I don't see oil dropping to $12 or $25, right? So um, it could go lower, but I don't think dramatically lower. So the way I look at this is the Canadian dollar can lose more value, but I don't think dramatically lose more value. Okay. I think it's had a big decline and it has to do with commodity prices. I don't expect commodity prices to go up anytime soon. I do believe they'll go up, just not this year. So if we were going to have like an 18 to 24 month overview, I would say generally sideways, maybe some weakness in the beginning. Then in the kind of the middle of that uh, time frame, I'd say generally stabilized. And then as Europe finally gets quantitative easing to stabilize their scenario, you're going to see a positive impact on the Chinese economy. And then they'll draw down their reserves of whatever commodities, and then they'll start ordering stuff from Canada. And Canada will start improving, but that's like 2017 or something, right? But meanwhile, Canada's largest trading partner is the United States. Generally speaking, it's doing fine. And so, yeah, commodity prices might not be ripper high, but their number one customer is doing just fine and should probably buy Canadian goods in particular because they're 25% cheaper than they were a year ago. So, I think they'll just hang on and do all right. Okay. Now, Australia doesn't have that scenario where their largest trading partner is not doing well and commodity prices are down. So, in order of things, I would say, New Zealand is very independent of China and the United States and is holding its own, but has a very high yield. So, the potential for carry trade is greater there than anywhere else. And that's really what you want, a slow rise. You don't want a fast rise, and you certainly don't want a decline. So right now, the kid finally, we've been waiting for this for like a year, is finally showing signs of being a nice little carry trade. The CAD should be stable and range bound for a while, and then generally improve. But the dollar is always going to be strong, the U.S. dollar. So every time the Canadian dollar gains a little bit of ground globally, it probably will lose a little bit of ground specifically against the dollar. And so, I don't know, just kind of basically sideways versus the US dollar. It'll do better, let's say, versus the yen or something. And then third in line would be the Aussie dollar, would be, the least favorable of the commodity currencies. And then you can go into Norway and Sweden and stuff if you want. That's your call. Okay? Good enough? Okay, so let's move over, go through the calendar. You never hold your trades. All right, here we go. All right, okay, right off the bat, some New Zealand news. Fine. UK CPI, yes, it's going to be important this week. Okay. We're hoping that this week maybe the economy stabilizes, but I don't think we got what we wanted. So we'll have to talk about that later in the week. Retail sales, yeah, we're looking for good news and stuff this week, obviously. But what's the driving force of the U.S. markets this week? Is it retail sales? Is it weekly unemployment claims? Is it the Philly Fed? What's got the attention of market participants this week? Employment? No. We got our NFB. Yeah, Mike's micro trades. Yeah, they're totally focused on that. Come on, guys, think outside the box. ECB, yeah, sure, but I don't know. I'm thinking a little bigger than that. Think outside of Forex. IMF report. Yeah, a bit, sure. But most market participants are not that smart. You have to dumb it down. G20. No, here let's just Hillary's announcement. Yeah, we're focused on that. Earnings. Earnings. Yeah. Corporate earnings. It's earnings season. It just started. Earnings season has just started. So we're focused on the first several companies reporting. And generally what we're trying to do is get through some of the big blue chips and find out if they're earning any money or not, if profits are fine and all that kind of stuff. And generally we want to see that they're making money. Okay, because right now the United States of America is the only game in town. Struggling, if it's corporations are struggling to make a profit, we're all in a world of hurt. Okay? So that's going to be sort of the backdrop of the next 3 weeks of trading. Now, they're not all going to report in 3 weeks, but a vast majority of the big boys will have reported, and there'll be a general theme of generally good, generally bad. Okay? It's reported every day, generally before right before the market opens, or you'll get some of these announcements. Sometimes it's after. Okay. But every corporation, every public corporation is required to report their earnings every quarter. So it's quarterly earnings season. And that'll be the general backdrop. Okay. So we'll see. So like retail sales stuff, okay, they're important, but a lot of this is going to be overshadowed by earnings, just earnings and earnings. Okay. How did U.S. corporations do over the last 3 months? Did they make money? Did they lose money? So like retail sales, okay, I think there'll be a good scalp in there. If the number's really good, that's fine. If it's bad, they're going to discount it and say, oh, it was weather, in the first quarter, blah, 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 blah. Fine, whatever. PPI, there's nothing going to do. There's no inflation. Don't worry about it. Okay. All right. GDP out of China and industrial production, big deal. Trade Asia that in. That's a big deal. Because what we want to see is the money that they're spending on their stimulus. Remember, they're spending money on stimulus. They've cut the reserve requirement ratio. They've cut interest rates. It's a big deal, right? Plus, the ECB is doing quantitative easing. I don't think it's trickled down enough to the average Juan on the street. Buying Bart Simpson T-shirts and these orders are going to China. So I think it's too early to see all of that, right? But the world does care about Chinese GDP. Great. ECB interest rate. What do you think? Are they going to raise interest rates? Of course not. The press conference. What are they going to do? They're going to say. The risk is to the downside. The Greeks suck. but there are glimmering signs of hope that quantitative easing is working. Now, of course, he's going to say that because he took so much flack to get the quantitative easing. So what is he going to do? Come out and say it's not working? You should fire me, right? Wait, what's he say? Yeah, I gambled all this money against the will of the Germans, and it was a real bad idea. I admit now, but hindsight's 2020. No, obviously he's going to come out. His lips are going to move, and he'll be lying the whole time. But that's his job, central banker. So, anyways, I don't know. I think it might put some waves in the market for 4 days, 3 days, 2 days, and then we'll just go on making money. So I can't tell you what's going to happen, but whatever he says, it's not going to be a long-term change in trend. Unless, of course, the unexpected happens and he says something completely unexpected. But that's really rare for a central banker to do that. Okay? All right, but it'll be important. And again, another great scalp, a great opportunity to make some money. Don't forget to pay your taxes. Okay? April 15th, right? I'm a corporation, so I pay taxes well before that. Only poor people pay tax on April 15th. Right? Remember my accountant, my tax attorney? They said, Wayne, there's 2 taxation systems in the United States. One for corporations, right? And one for poor people. So because all your money should be in ownership. You should own things, be in trusts. You should be in corporations. Only poor people have a paycheck stub and are waiting for their $400 income tax return. I got $400 this year. How much did you? They're all happy. Yeah. So, anyways, but people have to pay their taxes, right? So there you go. Lots and lots and lots and lots of Canadian dollar news, right? Yeah, you know what? This is going to be important. Obviously, they're not raising interest rates. I don't think they're going to cut, but maybe. I don't know. They're hurting, right? Compared to, we were at $1.05. Now we're at 75 cents. So a lot has changed in the Canadian dollar. The Canadian economy is obviously not going to enjoy high commodity prices. So there's some things that could be done here. Going to do okay, and they probably think the same thing. Maybe they make some adjustments. I don't know. So I think the statement is going to say a lot, and the press conference is going to say a lot. And as professional currency traders, I think we should pay close attention to this and get some idea of what they're worried about and what they might be doing, so that we can adjust our medium and long-term outlook for the Canadian dollar. So if I were me, and I was trying to improve as a currency trader, I would actually attend that meeting, watch the press conference. I would actually download and read the statement. And then I would write a 6 and 12-month outlook for the Canadian dollar just based on that information. Because if you're an analyst at a bank, that would be something that you'd have to do, right? So you should do it. And the upside to this, I mean, it's extra work, right? It's not required. But if I asked you, I'm like, hey, so tell me about the Canadian dollar, you'll say, oh, well, you know what? I attended the press conference and stuff, and I've read the statement, and I've looked at the statement from before and the differences between the two, and I looked at the fundamentals of commodity prices and this, that, and that. So I have an opinion. Let me tell you about it. Well, that sounds like a good answer. I don't know what you're going to say, but you set the stage beautifully, right? You actually sound like you know what you're talking about. That would be cool. I don't think anybody's going to do it, but I think if you took it seriously, I think you would do it. But we all know nobody's going to do it. It's too much work. It might take a few hours, right? Oh, well, I want to be I want to be filthy stinking rich, but like read the Bank of Canada rate statement? Oh, I don't know. That's too much work. I just want the money. All right. Well, Izzy says, can we go through a statement? Yeah, we can. I mean, they're pretty boring, right? That's the problem. And then some of it, generally, they don't give you really complicated facts and figures, but sometimes they can. But generally, they don't, but you should read it. The big part of this is that you're actually doing it. And here's what I would do if I were me. I know that 95, maybe 98% of people just will not do it. It's just too much difficulty or work going to the Bank of Canada website and downloading the report. We just know 98% of retail traders are just not going to do it. They're unwilling or incapable. And therefore, I'd say, well, I think I'm in the top 1%, but certainly the top 2%. So I'm going to do it just to be better than the other 98 that just can't do it. I'm just, because this is the thing that I think I should be doing. You guys get that logic? I think a professional trader would simply go to the Bank of Canada website and download the statement and read it. I don't know if I'm going to learn something, but I'm just going to be better than the 98% of traders that are lazy. And maybe I will learn something. And that'll get me from the top 2% to the top 1% because I'm a little more prepared now. But I just want to be the bottom 98%. How embarrassing would that be? Right? Like, oh my God, I'm like a average person. Who wants to be average? Who wakes up in the morning and says, I hope I have an average day? Hey man, if you're going to roll out of bed, you might as well be excellent, right? So go to the website, Izzy, download it, read it. If there are things that you have questions about, circle it, Google it, Wikipedia it, whatever. But now you got things you can start doing research on. One of the things I love to do is identify the things that I don't know. And sometimes it's very difficult because there's the known unknown and then there's the unknown unknown, right? So downloading things um, from a central bank and they talk about, full employment. You're like, well, what's full employment? They've talked about it a few times, a change in full deployment. So, well, write it down and then do some research. I had a guy watch CNBC and Bloomberg for hours and hours and hours. I think it was like 5 hours a day. He had to watch Bloomberg in the morning, CNBC at night for something like 2 weeks. He was struggling in a period of, trading. I'm like, well, you got to stop trading because you're losing money hand over fist and you suck. So I'm going to help you right off the bat, stop trading. And then I said, the second thing is I want you to get a feel for being a trader, a taste for the market and attitude and stuff, right? So I want you to watch Bloomberg in the morning for a couple of hours, 2-3 hours. In the evening, watch CNBC, or you can, whatever. I think it was CNBC in the morning, Bloomberg at night, because you can get Bloomberg at night online, or whatever. It's whatever. Bear with me. So anyway, so you watch 4 or 5 hours of financial TV for I think it was 2 weeks straight. And I said, just simply take notes and pay attention to the reoccurring theme of the things they're talking about. Because very often you'll find that they keep bringing in guests, and every guest wants to talk about gold, 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 gold for 2-3 days in a row. But you get all these like different people. Some are hedge fund managers, some are mutual fund managers, some are commodity traders, some are, corporate CEOs, and you start to see the theme that keeps getting asked over and over and over again. And you're getting to understand like what a mutual fund manager is talking about, what a wealth manager is talking about, what a hedge fund manager is talking about. equity trader, commodity trader, options traders. And over the course of 2 weeks, just write down the reoccurring themes and then write down things that they discuss and talk about that you just don't understand. And now you have a list of the things that you can start researching. Plus, you get to understand sort of the mindset of these other professional traders that have a career based on investing money and finding a profit, all the while trying to avoid risk. And what you're going to learn is things you don't know. You might not learn those things, but you'll at least identify the things you don't know, and then you need to do the next step is go figure out what those things are. And you'll just become more interested, more in tune. You'll just pick up the lingo and the language and the attitude and the thought process and the interest and the intrigue and all this stuff. And then we'll start from there back on the technicals. Okay, so it won't make you it won't help you improve. It won't improve your trading, but it'll help you as a trader. Because his problem was being a trader and just trading, and he was making mental and emotional mistakes, not technical trade mistakes, right? So that we had to change the attitude and he lost some confidence and enthusiasm. Well, how are you going to be as a trader if your technical analysis is good, but you've lost confidence and enthusiasm? How long are you going to survive? I mean, we know confidence is important, right? But how about enthusiasm, where you're like, yeah, I think I'm going to quit. Have you been in that situation? Maybe this isn't cut out for me. Maybe my mother was right. I should have been an accountant. Maybe a cube is pretty good. Yeah. Maybe guaranteed poverty has its upsides. Right? But we've been there. Oh my gosh. So his issue was confidence. But even bigger than that, it was enthusiasm. So I had to get him to want to be a trader again. And then we had to work on his confidence, which is simple, just consistency. And he had lost the consistency, right? So, but working on consistency when the whole time he's lost enthusiasm, it was completely wrong. So anyway, so I got him excited about being a trader again by basically hanging out with other traders. What do you do if you are in Timbuktu and you're a trader, and at the end of a tough trading week, you want to hang out with some of your comrades, and you just want to talk trading? And this week was a biatch. So frustrating. I just couldn't get, and there's no one to hang out with, right? So sometimes, CNBC and Bloomberg's all you got, but at least you're hanging out with some other traders and fund managers and all that kind of stuff. And you're like, oh, right. And you can reset your emotional clock, right? Or you probably use a room like this, right? You need some wane time. But, that's why I like doing these things. I like doing that for you, but I like doing it for me. Sometimes I need some you time. Okay. So anyways, we'll move on.com. Yada, yada, yada. So the employment numbers are big, right? I love Aussie jobs. Fantastic opportunity to scalp. So you can see right off the bat, Asia is going to open up big again this year. You like it? Weekly unemployment claims, yeah, okay, fine. Again, reasonable scalp if it's a big miss one way or the other. Philly Fed, Philly Fed past, it could buy dinner. Again, probably a shorter term trade. I don't think it's going to change the trend. So you already know what you're going to be doing that day. And then CPI, retail sales. This is going to be important to the kitty CAD. I mean, not nearly as important here, but this is going to help us realign our satellites for inflation. The disappointment is this would be much more important if it was before the rate decision, but this is after. But you know what? This is going to be good. So, you want to be heavy Canadian dollar this week as far as trading. I don't mean positioning, but as far as trading it and doing your analysis, because like the Chinese data is going to impact it. Okay. And then the rate, the statement, the press conference, that's going to be big. And then the CPI and retail sales. I mean, retail sales is going to be terrible. And CPI, well, is it stabilizing? Where are we on that? So this is going to be good. I mean, just imagine all the PhDs and the quants and the analysts. They need this data, right? I mean, just think of it. So people are paying attention to this, and it should create a tradable opportunity. And then, of course, NFP was a disappointment. So are we going to get some CPI? Are we going to get some inflation? That's what we care about here. And obviously, we want an upward trend in CPI, especially with so many market participants interested in the Fed raising interest rates. I think that obviously that the market's now thinking September. Remember how it was like April and June? Now they're thinking September, December kind of thing. Good. Okay, fine. So they're pushing it off a little farther. This is going to be important. But meanwhile, I want to say one more time, the general theme for global macroeconomics is going to be earnings. Okay? It's not even a Forex thing, but it's a macroeconomic thing. Okay? And the U.S. is the only game in town, and so we want to see okay earnings. Okay? We want to see at least okay earnings. If we get okay earnings or better, everything's fine, trend is on. If they're really bad, that's going to push things off very far, and there'll be some disappointment, and some rebalancing will be needed. See, Anthony's been reading. So here's what I suggest. You read the central bank reports. You don't need to read, warnings about China pulling down aid. Oh my God. Right. It sounds like a sewing circle. Look, China obviously is having a slowdown, and their largest trading partner is Europe. It's understandable. That's it. It's understandable. The big concern was the Eurozone wasn't doing anything about it for the longest time. Very bad, right, for China. Well, now they got their act together. They had to change some laws and give some new authority to the ECB. And the ECB finally was able to do quantitative easing, that kind of thing. And now it's just a matter of time. Okay. Now it's just a matter of time. There will be a change in trend. My guess, with quantitative easing in an economy like the Eurozone, it's going to be somewhere between 6 and 12 months to see solid change in the Eurozone. Now you'll see some change in 6 months in some industries because they'll get the money first, but in other industries it'll take longer to trickle down, but eventually it'll trickle down. Like water through the soil. Eventually it'll get down. Right? Shallow roots will drink first. Fine. Right? And that's where you get green shoots, right? Fine. So we'll start to see green shoots, and then real roots take hold. And this time next year, it should be recovering and inflation actually going up. And so along that way, it's a sea change, right? It's really slow. Just imagine a Coke bottle, an empty Coke bottle at the bottom of the ocean. and the waves are coming in and the waves are going out, and it's just moving the bottle a few inches in the sand. It doesn't seem to be doing anything today or tomorrow, right? But after a year of that, the bottle will have fallen apart and broken down, and the glass actually turned to sand. Slowly, hard to even notice the change, but over time, water over stone, right? That type of thing. So as quantitative easing stabilizes and then improves the situation in the Eurozone, China will therefore also stabilize and improve. And we'll see that through things like GDP and industrial production, what comes out this week. Do I expect good numbers this week? No. Next quarter? No. The quarter after that? Possibly, but only small. The quarter after that? Yeah, probably, but without a doubt that, if we get a positive result, it'll be solid. Will it be huge? No, but it will be beyond a shadow of a doubt things are improving. Okay? So it's our job to put all these pieces together. The ECB is doing quantitative easing. Who's going to benefit? Obviously, you buy the stock market. I mean, that goes without saying. But that's based on future future stabilization and profit plus free money, right? Great. So then how does it trickle down? And once it trickles down, where does it go? And then if it happens across border, if it's going to China, what are they doing with it? Now, China stabilizes. When that economy stabilizes 3, 4, 5 months in a row, what are they doing with their money now? Are they buying crude oil from Canada? And so on and so forth. So this is where I talk about things 18 months in advance. I'm putting all the I'm stacking the money, right? And I'm watching it flow. How long is it to get here? How long is it going to take to get there? How long will it take to get to the other place? And if I can get all of that right, I'll at least have the right strategy in place. Doesn't mean I'm going to make money, but it means I'll probably have the right strategy in place. And that's based on fundamental analysis and global macroeconomics and money flow and all of these things. And then I have to put in the proper technical analysis, which is tactics. And that's doing things like the strategy says I'm a bear. The tactics say I buy dips at support, buy dips to support, buy dips at support. The strategy might say I'm a bull. Oh, wait, did I get that backwards? Let's try it again. The strategy might be that I'm a bull, so I buy dips at support. If the strategy says I'm a bear, I sell rallies at resistance. Okay? Strategy, tactics. Right? Think about it. The book I wrote, 8 years ago? Strategic and Tactical Forex Trading. Makes sense. Develop a strategy, trade technically in that direction. Hey, I've taken too much of your time today. It's been well over an hour again. I'm sorry. But it's good to have a plan for the week. And it's nice to hang out with you guys. I really enjoyed it. Peace on earth. May the pips be with you. May your profits be above average. Again, if you watch this video on YouTube or something like it, give it a like, leave a comment, pay it back, participate. And thank you for being a client of Trader's Way. Appreciate it. Tomorrow we'll do lots and lots and lots of technical analysis. Maybe we'll throw down some trades again. Cheers.